Welcome back to CEO Money. I'm Micheal Yorba. I've got Mike Breese, President, Pinpoint Homes, on the show with me today. All right, Mike, we didn't get a chance because you were hopping a jet between, was it West Palm Beach and Minnesota last week. So I want to hear all about your trip to West Palm Beach. What happened? What should people think about before they get into a situation where they're confronting, or not confronting, but addressing all of the questions that a room full of qualified, sophisticated investors from family offices are firing off at you?
So, yeah, I'd like to talk about that. For those that are about a year into their fund like we are, and we're looking to kind of take that next level. You've got your angel investors in hand. You've started your investment strategies, and hopefully by the time you're looking to present to family office, you've kind of done one cycle through your commitments that you have in your memorandum. This is a good in-between angel investor and institutional group to go to. And why I say that, and why I think we saw a lot of good things out of meeting with these family office folks, is they're very sophisticated, which we'll talk about that a little later, and how to be prepared. So let's not forget about that. But they also are a group that the decision makers are the ones that generally attend the meetings. They can write the checks, they can make the decisions. So that's what you need. And they can act quick. And we're talking most, if you're looking to raise money, you can do it within 60 days, and a lot of them in less than 30. So it's a great opportunity to kind of take the next step in your fund, but you have to be ready, and we can dig into that how you want to.
Sure.
It's a great experience. We met a lot of good people. Family Office Network was the group that set us up. They have locations in all the major cities, New York, L.A., San Francisco, West Palm Beach, of course, where we're at, Singapore, all over.
Well, walk us through it. Some of the high points, some of the things that stick out in your mind, because at one point or another, if anybody is going to move their business from just a two-person operation into a bigger stage, especially if they're moving and leveraging properties like you are, they're going to have to go through this one form or another. So coming out of it, what were some of the things that stick in your mind that, like, be prepared for this, and if you are, figure out how to hold your ground here, this is where you give so that everything goes the way you want it to? I mean, walk us through that.
Yeah, you bet. So definitely have to be prepared. I mean, I would not approach this group without really having your business dialed in, have a track record in it even before the business, because 1 year is a minimum they want to see in the fund, because they want to see the actual entity or opportunity they're investing in is working. But you also need to have a track record before that. So know your stuff, because I'll tell you, I was very impressed. Even though they're investing in a lot of things, and I, of course, was presenting on real estate, they knew a lot about it. And they knew exactly what to ask. And in particular, once they're sold on the opportunity, your management experience, and your ability to do what you're selling, then it gets into how are we protected. And so make sure in your memorandum and in the way you've created or structured it, that the money, when it comes in, especially at the size, it's going to be $1 million plus if they're going to get involved. I'd say their sweet spot is $1 million to $10 million per family that comes in. Otherwise, it's not worth their time, and they're not so big that they're going to invest $50 million. Although there's some of those. They want to know how are distributions made, okay? And if that's what it is, what happens when you don't make them? Which is where the opportunity to create a sync fund was explained to me. That was new to me. But a sync fund, essentially, like in my fund, for example, we're raising $10 million. We would raise $11 million instead, park $1 million in an offshore account that's earning non-tax-bearing interest. In the event there was a shortfall in cash or distributions, you would draw from that. So it guarantees fluidity for them, which when they're reporting to families, as long as there's checks coming in, that's good for them, right? So there's protections for them. But also they're going to look for, what kind of warrants can we have in place? Basically the what ifs on the negative side. Make sure that's dialed in and covered, and you have answers for that. And also you have the exit strategy very well outlined. And I'll give a hint to everybody that's listening. You want to make sure that exit strategy is a 4-year or less rotation. They want to be moving money every 4 years. So that's kind of a key little secret, that if you can go in there with that magic number, you'll have success as well.
So you found that to be a uniform number for everybody. 4 years, 4 years or less, I want my money back, right?
Exactly, because the folks that are managing the money for these families, they're getting paid based on money going out and money coming in, and so they want to be able to cycle that. There's enough money that they have enough things going on that as long as they're in 4-year intervals, that was a consistent thing I heard for sure. Then they like it. That's kind of a almost a deal breaker if it's too long or if it's something that's too quick, because that's almost too good to be true. That 4-year cycling of money is a magic number for them. So make sure you have an exit that's designed for them to have their money back and reusable. They might even reinvest that money with you, but make sure the initial capital can at least be returned in that time frame.
Now, I recently went to a speaking event where one of the top people in Texas for angel funders and incubators was giving a presentation, and the question that I asked him, I said, okay, so let's say you come in, you start putting money into the company to help it grow. I understand that you've got the exit out here in the front, but up till that point, that exit point, how quick does your team that you bring in to assure that this is going to be a success, how quickly do you go to cash flow? And his answer was, who cares about cash flow? I just want to flip it. And I was like, well, wait a minute. So sometimes you run into those people that they don't care. All I want to do is be able to double my money, get out of it, and then it's somebody else's problem. Did you find that going on there, or was it no? I think we may love to leave a little bit in there and let that ride for a while. How was that conversation happening?
Well, they definitely want to see a set regular timeline for capital coming back, and they definitely want to see distributable cash being available. Now, it doesn't have to be for 6 months or even a year. In our case, it's 6 months, and they like that. I don't think that they would necessarily ignore the fact that there wouldn't be income before that. I mean, everyone I talked to wanted to see regular cash coming back because that's a sign that it's going well and it's working without having to go to your office and do a massive audit to figure out, is my money really there? Is this balance sheet really correct? What tells them more than anything that it's working is a check that's showing up, and it's showing up regularly, and it's in accordance with the plan and in line with the ROI that you're committed to. So I would say that they're going to be more interested in not necessarily that they hit a home run quick. What you preach is what you can practice, and then it comes through. And that's why you need 1 year of performing and at least showing one cycle of, in my case, it's real estate. Show us that investors came in, these were the expectations, the ROI was this, you performed at this, which in our case really outperformed it, and then you made the distribution.
We got to run, Mike, but thanks for being here. Good luck in LA.
Yeah, thank you. You take care, Mike.
All right, we'll be talking to you soon. Mike Breese, President, Pinpoint Homes. You've been listening to CEO Money with Micheal Yorba. Thanks for listening.